Alright, people. So most traders, especially the newbies, have the attitude or the behavior of avoiding the 1 minute time frame because most people believe that the 1 minute time frame is either too fast or like we were told back in the days, the 1 minute time frame and the lower time frames are for gamblers. But the truth is, we have to start embracing the 1 minute time frame because with the proper criteria and system, the 1 minute time frame helps us to filter accurate and low risk entries compared to the higher time frame. And in this video, I'm breaking down my 1 minute entry criteria and strategy, the same one that I've used to consistently catch sniper entries with tighter stop losses and higher reward ratio. So if entry refinement have been your problem, just make sure you stick to the end. Let's get started. Alright guys, so before we dive right into the chart, I want us to understand that this particular entry criteria and strategy works with any trading system, anything that you trade. If you trade price pattern, if you trade SMC, if you trade Falcon, if you trade anything at all, any strategy that you trade, this particular entry criteria work with them because the entry criteria is based on strictly market structure. It's based on higher highs, based on higher lows, based on the market pivot points and swing points. All right, any system you trade, this entry criteria is going to be a game changer for you. I have my friends who are trading Falcon till now, and some of my students who I taught Falcon strategy when I was trading Falcon, and they are using this particular entry criteria, and it's all going very, very well and very, very effective. Alright, guys, as I said earlier, the entry criteria is based on strictly market structure. So, if you understand market structure to an extent, you should know that when you have a structure or a direction on your higher time frame, every impulse and correction that is embedded into that direction, when you go to a lower time frame, every impulse and correction is broken down into series of trend. All right, for instance, this is an impulse to the upside on the higher time frame, can be 1 hour, 5 minutes, or whatever higher time frame that you use for your directional biases. If you come to the 1 minute time frame, for instance, this impulsive phase on the higher time frame is going to be a series of uptrend, series of higher highs and higher lows on the 1 minute, and same to this bearish retracement. It's also going to be a series of lower lows and lower highs. It's going to be a series of a downtrend on a lower time frame. All right, so for those of us that trade smart money, it's the same stuff. Our impulses are always structures. You know, they are different structure on a lesser time frame. Okay, now to implement this particular entry, I already said, it is based on market structure. All right, so for those of us that trade price pattern, if you trade price pattern, you know that when price gets to this level, you look for a confluence to enter the trade, right? Mostly people look for rejection candles that can reject from that particular trend line so that they can get a confidence that you price is pushing, so let's join. All right, but if you're using this entry criteria, what you have to do is that since you are able to identify that what brought price to your point of interest, which is a trend line on the 1 minute, is an uptrend, when price approaches that particular point of interest, you just have to pay attention to that little uptrend that came to your point of interest, which is the trend line. Okay, now you have to wait for that little uptrend that came to the trend line change to a downtrend. Changing to a downtrend means by breaking the previous significant higher low and then creating a lower low. Then when price creates a lower low, we then pull back to mitigate order flow. Then we take the trade from the order flow to find our way down to our point of interest or our target. Okay, that's how simple the entry criteria is. All right, for those of you that don't really understand order flow, look in the previous video. I spoke everything about order flow, how to identify it, what it means, and then how to find out the valid and the correct order flow that is likely to hold price. So watch my previous video, you get to understand fully what an order flow is, right? So all you have to wait for on the 1 minute is for that little uptrend to change from an uptrend to become a downtrend. When price pull back to create a lower high to confirm that uptrend, to confirm the downtrend, that is then where you trigger your entry. So if we are able to identify a break of structure, a change of character here, changing this bullish internal structure to a bearish internal structure, when price pulls back the order flow that can be found on this impulse that change the structure, then we put our limit on that very order flow and then stop loss below it and then target to wherever you want to target. You can target 1:3, you can target 1:to whatever, depending on your trading style. People that trade price pattern, they always like to target price to bring it back to the trend line. So I'm sure you understand that. Now, for those of us that trade smart money, it's also the same stuff. Price have to come to your point of interest first before you are able to implement this system. Okay, and then how you implement the system is the momentum that came into your point of interest. Okay, if price is coming down here, it's going to come on a lower time frame. On the 1 minute, it's going to be series of downtrend that will come into our point of interest. So when that downtrend changes to an uptrend by breaking the significant lower high, then we can take our entry on the order flow and then continue. Let's open the chart. Let me show us a practical example with a trade I'm currently holding on Euro USD. Alright guys, I'm currently holding a buy on Euro USD. I'm not going to really dive into the direction based on smart money concept that I got the directional bias, but I'm going to talk about the entry, which like I said, it works for every trading system. Okay, now let's quickly backplay this to where we met price and how things unfolded and how I was able to filter out the entry bit by bit. Okay, so let's delete all of the twins there. Now, like I said, it works for every trading system. So let's illustrate using price pattern trading or trendline trading first. So if you are trading trendline 1 2 1 2, you have what? You have your trendline rejections, right? So price is rejecting from the trendline here. Most people will already just dive into the trade based on the rejection here. It works for some people. That's why we always have risk entry and reduced risk entry. So this my 1 minute entry criteria is a reduced risk entry because it's putting you on a safer side. It's putting you trading alongside with the trend. Okay, so immediately you see price approach your point of interest, which is a trend line, or bounces off of it, all you have to do is go to the 1 minute time frame, the last structure that came into your point of interest, which is the downtrend. Okay, you have to illustrate, you have to identify the significant swing point on that particular trend. Set a significant swing point. For those of us that already understand market structures, I'm sure you understand why I'm marking those series of highs and lows. So this is a high, this is a high, or this is a high, this is a lower high, lower high, lower high, and currently price is here, right? So since we bounced off this place, price says it's kind of like a signal for bias, right? So what we have to do based on our entry criteria now, we have to wait for price to break through this significant lower high to create a higher high. When price creates a higher high, then we pull back to mitigate the point of interest, which for me I always use order flow. Pull back to mitigate the order flow, then we take our entry from that order flow to continue the trend. This is reducing the risk and giving you confidence that since the downtrend have changed to an uptrend, you're actually trading alongside the trend. Okay, now let's play price and let's wait for price to play around. Okay, now price has significantly broken through our lower high, right, creating a higher high. So we have a break of structure here. You don't need to actually mark it out, but this is how we do it when you trade this particular stuff. You don't actually have to mark it out. All you have to do is to be able to identify it and know the psychology behind all of these things. Okay, so for me, the order flow, this is another flow here that I'm going to pay attention to, and this is the one I actually paid attention to for my traders you see I'm currently holding. So you can put a stop loss here, and to be on the safer side, you can put a stop loss at the lowest low here. So all you have to do now is to place your limit orders. Okay, place your limit orders, your buy limit, and wait for price to come into it, and then you see what happens. So we're going to play price right now. You can see this is an emotional time because price does the ups and downs, so you have to make sure that you practice this very well before you actually implement it into your trading system, because if you don't practice it, when price is doing all of these ups and downs, you're going to get into some kind of panic mode. If you don't get used to the system, you don't build confidence in it, you're going to have an issue when you use it directly. It's very simple, so I know most people just want to jump on it, but please make sure you practice this particular stuff before you put it in your live trading. Okay, so you can see price have mitigated my point of interest, and that is why you see that the trade I'm holding is actually in profit right now. Price is doing the ups and downs, and that is normal. So guys, for the uptrend, it's just the flip of the coin. Let's quickly look at the uptrend using GBP USD. Since our previous example on Euro USD was for price pattern identification, let's use smart money concept to identify the direction here and then point of interest, and then we go to our 1 minute for our entry criteria. Right, so we have a break of structure to the downside, and that's why we have this order flow. Those people that trade smart money, you already understand it. I'm just here to focus on the entry. Okay, so the moment you see price coming to your point of interest, all you have to do is go to the 1 minute, and then you pay attention to all I explained to us, and then find them out and get into your trade. Okay, so all you have to do is what? Pay attention to the momentum that came into your point of interest, the trend that came into your point of interest. So if you look at it, we can have a series of high here, price pullback, price created this high, this low, and then finally we are in our point of interest, right? So since this is an uptrend, this was the last significant higher low we have to wait for price to break through the higher low, creating a lower low, which is going to be signal for our downtrend. Then when price pull back to mitigate a valid order flow that we're going to identify here, that is when we now take our trade to continue the trend. All right, so let's play price to see if price will break through this our low, and then we can get our trade. All right guys, so you can see that price has significantly broken through this particular low, creating what, another low here, right? So now we now have a low, we now have a lower low, we have a high. So we're looking for an order flow where price is going to create a lower high to start or to confirm the downtrend. All right, so that we can also execute. So this is our order flow here, this is our order flow here, and I'm going to put my sell limit here. Then for the safer side, you can put your stop loss at the highest level. For the tighter stop loss, you can put it right at the top of your order flow. Okay, so all we have to do is play price and wait for price to do its thing. All right, so guys, like I said, make sure you practice this stuff because it is very simple, but practice it so that you can grow, build up the confidence before using it in your live trading. So price have mitigated our point of interest, our order flow. Price have triggered our order, and then we're going to see how price is playing out. So you can see guys, this particular entry criteria is pretty simple, very simple. It gives you the confidence that you know that yes, you're already trading with the trend, and helps you to stay in check. All right guys, so I hope that was helpful. I hope that was educative. Please make sure you practice this thoroughly before you put it into your live trading. All right, if you enjoyed the video, if you find it helpful, please don't forget to like. If you are new to the channel, please subscribe and support me. Thanks for watching, and stay high.